I truly hope that we end up with gold and not a gold standard. Gold will have a connection with whatever monetary system we end up. Should be obvious. The dollar, the yen, the euro, the pound, they should not exist. We should have nanograms, milligrams, grams, and so on. That's how we should be measuring the value of things. These fiat currencies are all just schemes to confiscate the wealth of the population and enslave them. And it is sad that people don't realize this.
Still nothing to get excited about. We could be on another one of, God forbid, but we could be on another one of these things, another 4 months. We've come a long way in a little over 2 months. Consolidating at 4,000 ain't a big problem, especially with all the real news about gold in the market.
In this powerful discussion, financial educator Mike Maloney explains how the global monetary system is entering its most fragile stage in decades. He highlights how growing debt levels, weakening currencies, and unsustainable central bank policies are quietly setting the stage for a historic revaluation of real assets. Central bank gold buying reaches unprecedented levels in 2025. Central bank gold buying has fundamentally transformed the approach to gold reserves worldwide, establishing accumulation patterns that represent the most aggressive institutional buying behavior in modern monetary history. The third quarter of 2025 witnessed extraordinary momentum as 220 tons of gold flowed into central bank vaults, while silver demand for industrial and investment use continues to outpace supply. The transition to tangible wealth is accelerating, and those paying attention can already see the writing on the wall. If you value clear insights over market noise, don't forget to like, share, and subscribe to the channel, your trusted voice on gold, silver, and the truth behind today's financial shifts.
Everybody has been driven away from being a saver into speculation. They have to jump into the stock market or some other much riskier way of doing things. If you have sound money, actually, I call it honest money. If you have honest money and you can't expand the currency supply, deflation is the natural order of things. Everything, you should be able to stash gold under your mattress, and when you take it out and spend it 2 years later, it's worth more. It buys more stuff tomorrow than it does today. So you don't need to put it in a bank and get it in interest rate to try and stay ahead of inflation. There wouldn't be any inflation because mankind gets more efficient and we're always inventing new stuff. And so the natural order of things is for everything to become cheaper and cheaper and cheaper. We live in a matrix, false world reality. Gold will have a connection with whatever monetary system we end up. Should be obvious. We are nearing the end of this grand experiment that Nixon started on August 15th, 1971. Up until that point, every time a nation had abandoned real money, gold and silver, and replaced it with a fiat currency, it failed. 100% failure rate. And then August 15th, 1971, when the dollar became disconnected from gold and we ended the Bretton Woods system, the rest of the world became disconnected from gold at the same time because they were all connected to gold through the US dollar. So we began a grand experiment where the hundreds of times that it's been conducted in the past, it has always failed. There is no success before 1971 of a fiat currency surviving. And we shifted the whole world to this. And you can see that after all these years, things are just starting to crumble right before our eyes. I truly hope that we end up with gold and not a gold standard. Gold is the freedom. If countries, the dollar, the yen, the euro, the pound, they should not exist. We should have nanograms, milligrams, grams, and so on. That's how we should be measuring the value of things. We should be doing grams and milligrams of gold, and we should be doing grams and kilos of silver. That's the way things should be priced, in weight, not in some national fiat currency. These fiat currencies are all just schemes to confiscate the wealth of the population and enslave them. And it is sad that people don't realize this, and that it's happening invisibly to them. It's those invisible handcuffs.
Just this week, spot gold traded near record highs as geopolitical tensions rose and central banks added more to their reserves. Data from the World Gold Council confirms that official sector buying remains strong, especially from emerging markets seeking protection from currency volatility. Meanwhile, physical demand in Asia continues to absorb supply, keeping prices resilient even during dollar strength. These moves point toward one conclusion: the market is preparing for a shift in value perception that paper assets can't match. In this insightful analysis, market veteran Vince Lanci breaks down the subtle but powerful shifts happening in the gold market. He explains that while headlines focus on short-term moves, the real story lies beneath the surface in liquidity, positioning, and global demand. The recent rally in gold isn't a fluke. It's the reflection of a deeper change in market psychology and trust. Now, let's go back to the interview.
The breaking story. Cambodia is among the first nations to place part of its official gold reserves under Chinese custody, marking the first tangible step in Beijing's effort to position itself as a global bullion storage hub. China's entry into the gold vaulting business for central banks was first discussed in two stories on GoldFix. The first one was when they announced they were getting into the business. I would say that we broke that story in the non-lamestream media. And then we gave you quickly after that the implications and how it was an attack indirectly on the BIS and their own London business model. Basically, the London market is dying. If they put their gold in Shenzhen, then that will enable Cambodia to get currency for it and use that currency for growing its economy. And that's what they're going to do. Next, UBS price hikes hint at deeper theme America is buying. That's about platinum and palladium. UBS analysts Giovanni Starnovo and Wayne Gordon, fresh on the heels of raising their silver price targets and correctly calling for a new all-time high, have now raised their price targets for both platinum and palladium for divergent reasons. The reports released by the UBS Chief Investment Office on the 30th of October point to diverging drivers in the two markets: policy-driven tightness in platinum and sentiment-driven accumulation in palladium. That last part there is a little bit of a word salad. We're going to tell you what it means. Fundamentally, platinum is a buy, and fundamentally, palladium isn't a buy, but we're going to buy it anyway because the U.S. is buying it, and that's the deeper theme. America is buying everything it can, as fast as it can, as quietly as it can. All right, this is kind of important, or it could be complete nonsense. You may or may not remember when this started to happen, when we said this is the BIS selling, and it may or may not have been, but we think they were there. Macro discretionary was definitely selling it here too, right? We identified, well, Goldman became very active in here. They were long gamma, and they were selling high and buying low, and they were booking a lot of money, we saw. And we identified Chinese buying verified from a bullion bank as buying between here and here. So after a while, we saw a ledge form, and it broke it once or twice, but it got back above it. The other ledge was down here, which was right here, and never got there again. So you have your first ledge and you have your second ledge. Anyway, the point is, we spotted this ledge probably tentatively here, but definitely here, the way it acted. And so we talked about that from a trading perspective. Now, we might be seeing another ledge, okay? You've got a rally. That's a BIS cap. Maybe I can be wrong, but we'll see. And now you have a sell-off for many reasons, valid. And now you have the knife caught. And we talked about this a couple days ago. We said, oh, this is kind of cool. We had our little, this is our range. We're not really bullish until it gets above here, right? But then we started seeing even another echo in here. And we said, all right, is this a bottom? Is this a knife catch? And look at that. 1, 2, 3, 4 days. Now, in the past, if you're a gold person, like ledges are broken. We fall off of ledges, marble rolls, or whatever you want to call it. But here we are again. So I would be as a trading range trader, I'd be a buyer of the ledge. I buy a little at near the ledge and risk a little bit below. And I would look to buy if it goes below the ledge and back up through it. Then you might have a little bit of a spring effect from some people selling it in the hole. Otherwise, still nothing to get excited about. We could be on another one of, God forbid, but we could be on another one of these things, another 4 months. We've come a long way in a little over 2 months. And so consolidating at 4,000 ain't a big problem, especially with all the real news about gold in the market.
As we close, one message stands out. The global shift in gold signals more than just market movement. It's a reflection of confidence quietly draining from paper promises. We're seeing central banks hoard metal, nations reevaluate reserves, and investors question the durability of fiat currencies. The cracks forming in global trust are aligning with every ounce of physical gold being pulled from the system. While headlines focus on temporary price swings, the underlying story is much deeper. A major realignment is happening, one that could redefine how value is measured in the coming decade. So, whether you're stacking gold, watching silver's next breakout, or simply trying to protect your wealth, this is the time to stay informed, not reactive. The next few months may write a chapter the mainstream isn't ready to cover. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.